All right. So I've come across something quite interesting just recently, and it's very clear to me that given what it offers, it gives us the opportunity to make a strategy, develop a strategy on how to retire completely independent in 6 to 12 months. And I'm going to show you two different examples, one for 6 months and one for 12 months. And those will be illustrative and examples for you. You'll be able to plug in your own numbers to see what works for you. Okay. So the objective, as I just mentioned, is to achieve a level of financial independence in 6 to 12 months. And I know that sounds like a stretch. None of us are really used to knowing or seeing or hearing about anything that enables us to do that. But we're going to be talking about a very simple buy and sell opportunity. All right. Not that we're going to be buying or selling, but the one managing the program is buying and selling. And I'll explain in detail here as we get to that point. But it's basically arbitrage. All right. And there's no market risk. And I'll explain that. You'll see that very clearly when we get to that point. But let me just make this disclaimer. Of course, whenever dealing in areas of finance, potential investments, things like that, you're always dealing on very thin ice when it comes to the regulators, right? And so we can talk about it here, but we're not going to do anything in the public. Okay, this is something that's done under the umbrella of the Monaco Management Group Private Member Association. Okay, so this is one of the benefits that the PMA offers. And so I just want you to understand that right up front, so that'll eliminate some questions that are not necessary at the end. And then I'm going to share with you the due diligence that I have and what I've based my decision on. And that'll surely answer many questions for you. And then you can make your own decision as to how you feel about that. Okay. So that's what we're going to cover tonight. So I think most of us understand the power of compounding, but it's important maybe just to illustrate an example of that. And here I have an example of a 5 year period. That's 60 months, starting with a present value of $1,000 at an interest. I just picked a number, all right? This doesn't represent anything. It's just hypothetical. So I just picked 3% just to illustrate compounding. Okay. And then the periodic deposit would be to add $100 a month to that. Okay. So this is what you get. In 5 years, you'd have $22,000, which is a 2,200% rate. Now that's quite a growth rate. That figure of $22,000 in 5 years probably ain't going to mean much. But you see the power of compounding. Who do you see off of Wall Street or anywhere else talking about a 2,200% return? All right. So just understand that, and this is one of the biggest beefs I have with the thieves that are out there and the IRS, the tax man, the bankers stealing your future financial capabilities with their amortization schedules. You know, you end up paying 3 times the value of the house, and they get paid several times for that house. Okay. So what I'm looking at is understanding the power of compounding rather than giving that to the tax man or the bankers. What could you do with that if you had it working for you all those years? All right. That's what I look at. So if you're doing things to save on taxes, okay, that amount that you save, that's something, but it's nothing compared to what it could be if you allow that to compound for 10 or 20 years. So by that means, these people have really stolen your future. All right. And so now it's time for us to reclaim that, is my position. Okay. Here's same example, same investment over 10 years. That's 120 periods. And over 10 years, you can see where that $1,000 and the small monthly contribution is $147,000. All right. So compounding is a big deal, especially when you give it time. All right. So I want to establish this right up front because it's going to be important in our planning. So here's how this works. Okay. What we're dealing with is a trader, a broker who has a very large list, Rolodex, of high net worth individuals and institutions. And what he does is he brokers Bitcoin transactions. All right. So in this example, again, these are hypothetical numbers just to illustrate. But let's say we have a seller who wants to sell 10 Bitcoin. Right now, the price is 91,700, or it was this morning anyway. And let's say that seller is going to take a 2% discount. In other words, pay the broker a 2% fee to conduct the transaction and sell it for him. All right. Then the broker has a buyer already, and he's willing to buy Bitcoin with a 2% premium. So he'll pay 2% above the spot at 93,534. Okay. So in this scenario, the broker has a seller, he has a buyer, he quotes the price, they both agree to the price, he executes the transaction, and boom, he makes 4% on the transaction. 2% on the sell side, 2% on the buyer side. All right. Very simple concept. I'm sure most of you understand that, clear as a bell. All right. But that's what we're talking about. Now, when you talk about arbitrage, many of us have been involved in the Traj Tech or other automated systems that rely on computer power and technology and algorithms to scan the various exchanges around, and they look for disparities in price. And then those computers, when they find a disparity in price, they'll capture that difference. And typically, those automated transactions end up with micro profits, okay? But they do it like 1,000 times a day, many trades during the day, even though the profits may be small. Okay, now this is different. This guy is one man who has the clients who are wanting to buy and sell, and many of these clients are institutional. All right, so that gives you a little bit of an idea the marketplace that he's dealing with and where the profits come from. It's very simple. All right. This is age old. You could go back to the pioneering days and basically do this with the merchant on the old Main Street selling bearskins, right? All right. He buys it from the trapper at one price, he sells it at a higher price. He's doing arbitrage. Okay. Now, the difference with arbitrage is the buyer and the seller are both lined up at the same time. There's not an investment in the asset hoping to sell it later. Okay, the buyer and seller are lined up at the same time, and the exchange is done simultaneously. All right. So, with that in mind, people often say, well, this is a no risk situation. So you can see where the profits come from. All right. So if one transaction this guy does amounts to, let's just say, hypothetically, 4%, and he's told us that his profits range from 1% to 10%, probably depending on the size of the transaction. Right. So the larger transactions take a smaller fee. But if he does that several times a day at 4% each, you can do the math. All right. What's several transactions at 4% each in a day's time? And then if he can do that every day, you can see where some pretty astronomical returns come from. So in this particular plan, he's got three plans actually. He's got the yearly plan for small investors, starting at $1,000 up to 99,000. And for him, honestly, 99,000 is small. He does some pretty large transactions, and you can see the return. over 5,500% in the year's time. The monthly plan has a monthly return of 81%, and that's fixed every month. It's not variable. It's not, well, we'll see how well he does this month and see what we get. It's not that. He's very confident on what he does. It's very consistent, and he's confident to offer a fixed return, which I almost hate to even talk about this number because to most people who are not familiar with anything outside of the traditional banking world, they would find that hard to believe. But if you understand business, you understand why and how that's done. Okay. Now, this monthly plan, you can start as low as $250 and go on up to 10 million. So there's quite a range there. All right. So that's where most people end up. And then if you get up into the stratospheric figures, he's got a plan for that. That would probably be a special arrangement. But I think most of us would probably look at the monthly compounding plan. So that's where most people are going. Okay. So let's talk about two specific strategies to retire independent in 6 to 12 months with this information as a baseline. Okay. We understand what is done to generate the profits. We understand what those profits are. So with that as our baseline, let's take a look at some given input. And I'm going to give you these two examples. And of course, you can run your own numbers and figure out what works for you. But just for example, let's take $1,000 in 12 months at the monthly compounding plan rate. And you can see the figure that comes up when you compound that. And here there's no monthly periodic deposit. It's just a flat one time. Okay. So it's quite astounding, quite astounding. But if you know how compounding works, you can see this is real. All right. If you can maintain that rate of return. That's the key, of course. All right. So there's a plan for just about everybody. And I'll guarantee you, if you don't have an extra $1,000 laying around right now, I bet you could probably find it somewhere, get it somehow, if your financial future depended on it, right? All right. The other strategy, we look at a $5,000 deposit at the same rate of return in 6 months. And here you end up with 175,000. And I think it might be a prudent strategy at this point to withdraw the 75,000. You've got a lump sum. Now you can take care of a few things, pay off your credit cards, help your mom out with some things that she needs, and whatever else is on your list. Right? So you got 75,000 you pulled out. You leave 100,000 in. And at the rate of 81% a month, what would that give you as a monthly profit or potential income? Do the math. Again, I'm a little embarrassed to even talk about figures like this. So you're going to have to do some of the figuring yourself, see what you come up with. But that ain't a bad plan for 6 months. And the way things are going in this world, I'll tell you personally, I don't do any long-term planning. I'll tell you right now, all right? Cash is king. And from my perspective, I'm looking at short-term planning. I want to see results quick and be prepared for whatever comes, okay? So there's strategy number 2, all right? I told you I was going to show you the strategy. There it is. Simple. All right, now, a lot of people will jump into a program and start making money, and that's all well and good. But there's a lot of things to consider, right? You've heard the stories of people who win the lottery. They've got $3 million today, and a year from now, they're flat broke again, just like they were before they won the lottery. All right. So there's some keys to building and keeping wealth. And that's why we have the MMG Capital PMA to round out some of these things. You've got tax considerations. What did I just say about the tax man stealing your future? Because the money he gets, you can't be compounding. All right. So you've really got to consider these tax considerations. All right. Then you've got security and privacy considerations. Now, I consider myself as one who has been around the block a couple times, perhaps have gained a little bit more knowledge than some people, and pretty savvy as when it comes to business and numbers and finance and stuff like that. But I hate to admit, I've been scammed more than I care to admit. And think of the people that don't have the knowledge and the experience, and the predators that are roaming this world right now looking to, kill, steal, and destroy wherever they can. So these are things that have to be considered. Security and privacy, and they go together because without privacy, guess what? You don't have any security. These days, the key phrase everyone's talking about in the status quo world is, oh, we got to be transparent. You got to be transparent. You got to lay everything out on the table. And I get so disgusted every time I log onto the internet, these apps, they want my phone number. Oh, upload your profile picture. Upload some photos. They're coaxing people to give up their privacy. And it's not just for convenience or fun. They want information on you. Information is being gathered. There's programs that are in supercomputers compiling all of this data. There's nothing about you that Big Brother doesn't know about, right? So you've got to take stock of these things and start to put some security and privacy into your life. Then, once you start to accumulate wealth, you've got to really have some kind of personal infrastructure to administer that wealth properly. In other words, you got to have the right kinds of accounts in the right kinds of places and the right kinds of people to deal with to help you do the things you need to do on the financial end. Okay? So that involves, handling and managing cryptos. A lot of people are a little behind the curve or maybe a lot behind the curve on cryptos. You've got to get up to speed on that. All right. Dealing with the banks, I'll tell you from personal experience, is an absolute nightmare. I cannot tell you the horror stories. I could take the next hour just scratching the surface of the horror stories that I've had personally and my own clients have had. So cryptos is, at least for now, one answer, and there's probably more than one answer to avoiding the liars and thieves operating the banking industry. Okay? Word is there's some changes on the horizon as far as that goes, and that may be a warning to some. It may be hopeful to others, depending on what you're looking at. But the traditional banking system is on its way out, and you don't want to be caught when the building collapses. Okay? I'll just leave it at that. So handling and managing cryptos is very important, and we get into that. Understanding how the super rich do it. Okay? In the PMA, we've got some very extensive research material that will help you understand how these multimillionaires and billionaires get away paying little or no taxes. There's stories I could tell you about that, but I won't. I want to stick to the agenda here. So for the MMG Capital Private Member Association, these are the things that we get into. All right, that's what this is all about. Making money is one thing. Keeping it and managing it properly is an entirely different arena. All right, and you can get all the information you want. I'm not going to get into it now, but go to mmgcapital.biz. You'll find our PMA, and you can just follow the breadcrumbs from there. Okay, so let's do a little bit of due diligence. All right. I'm going to share with you the due diligence on this program that I have. And again, you can use your own judgment. Maybe it resonates with you, maybe it doesn't. Okay. Follow your spirit. Okay. Real buy sell arbitrage. I'm just going to read through this, all right? And you can read through with me. There's no sense of doing anything more than that. That way you get the full import of what's here. Now, this document was sent to me by my friend who introduced me to this program. And full disclosure, I've just joined, I've just made deposits, and that's all the experience I have. That's it. Okay. In other words, I have no experience. I'm just getting started. And I've based it on what my friend shared with me and what others who have been more involved than he have shared with him. Okay. So that's what this is. All right. This is a document he sent me. I've edited it a little bit. All right. Just on a few little points. So I'll just give that out up front. So he says, I've joined a small cap crypto trade company. The company trades via arbitrage and guarantees that one's principal will not be lost. All right, let's talk about risk. Let me interrupt here. People might say, well, there's no risk in arbitrage. Well, yeah, people that say that are really not giving the complete picture. There's always risk in everything. There may not be market risk, where traders typically will buy into an asset hoping it goes up, but if it doesn't, then they lose. All right. So there may not be market risk because the buy and sell happens simultaneously, but there are other risks. All right. There's the risk, geopolitical risk. What if war breaks out and interrupts transport and communications? What if the Earth ends up going through an asteroid belt? All right. There's counterparty risk. What if the other guy on the other end doesn't perform? There's currency risk. Okay, well, you deposit in dollars, and they're trading Bitcoin, and the dollar value is declining. So you got the fluctuating values of currency. So you got currency risk. So there's a whole list of risks that you need to understand. So when someone says, "Hey, there's no risk in arbitrage trading," well, that should be clarified to say there is no market risk. That would be correct. Okay, so they have entry levels for people from 250 all the way to 100 million. So simply by indicating that, you can tell that he deals with some pretty high net worth clients. So 1,000 can compound at 81% per month, and it's left to compound. And if left to compound, the client will have 1.2 million after 12 months. We covered that. Okay. Now, on this program, it doesn't automatically roll over and compound. You have to withdraw and then reinvest on a monthly basis if you want it to compound. So, in light of other traders out there who have lost investors' money, I think many of us can cry in our beer over that one. What I like about this one is the trader himself has eliminated his own trading risk nearly 100%. That's the nature of arbitrage. If it's done correctly, because it's buying and selling the same type of asset from different sources at the same time and taking advantage of the price disparity. So a purchase isn't made unless a sale at a profit is already locked in. So this provides an unusual peace of mind for both the trader and the investor. This is of paramount importance to understand. Where an investor must turn over control of his capital to the trade desk in most small cap programs under 1 million, such programs normally place the funds at risk by trying to buy low and sell high at different times in sequence. This means if he expects an asset's price to be going up, he buys. He can only take a profit when it does indeed go up. But once he has bought, the money is at risk. If the asset's price moves down, there's a loss. This requires correctly betting on which way the market is moving. And let me tell you from experience, that's a difficult game to play. It's a pretty tricky game to play. All right. The best traders have, it's probably the most expensive education you can ever get, learning how to trade, because you're going to have to lose a hell of a lot of money before you really start learning what works. That's the sad truth. Okay, so by contrast, this trader's not making any such bets. This is not a speculation trade. He has already locked in a buyer at a higher price and he buys at a lower price. The buy and sell transactions are practically simultaneously. All right, the trader is a PhD, IT specialist. So he knows how to make the transactions lightning fast with no risk. Hence, again, caveat on no risk. Hence, what he has mastered is the scaling down to smaller investment levels, the same zero risk arbitrage methods that are used by $100 million traders. All right. Now, my friend who is writing this has a great deal of experience in private bank trading programs. And so he knows what he's talking about on these 100 million plus trades. Okay. Actually, the program director refers to himself as more of a broker. He's brokering Bitcoin deals between institutions, essentially, thus the large numbers, and takes the spread in price difference for himself. So he has both sides of the transaction, resulting in low to no risk. And then it removes the term trading, which has a more risky and a bit negative, cautious connotation. All right. Clients can watch trade profits start accumulating in an online account under password login every banking day after their investment posts, depending upon which they choose. There is no waiting for the trader to send a check or a bank wire. Each client can add funds to his account or take funds out anytime. Profits and principal can be withdrawn at any time. However, it's recommended to wait until after every investment cycle, if you do monthly or yearly, so as to benefit from the maximum profits. Okay. I asked my associate who introduced me, is there any record or any evidence of past success? Which everyone always asks, right? What's the security of one's investment other than the corporate guarantee? So here's the response. I've had numerous text and phone calls with the trader. He has been very informative and responsive. I've listened to him on a conference call talking with another trade savvy prospect who seemed to be pleased with what he heard. I've invested into the daily program. They had a daily program. It is no longer. That one has stopped. Every banking day, the account compounded by the scheduled amount, starting with the first banking day after the account posted. On November 29th, I invested into the monthly program, which is scheduled to compound at 81% a month. I've not pulled any funds out, but I don't intend to, as I want to keep compounding. It's a U.S. trader, and he can be held accountable by U.S. laws. All right, he trades by arbitrage so as to not place investors' funds at risk like the normal trader. All he has is the corporate guarantee. Of course, I can't make financial recommendations, but my advice for people who wish to move forward is to start small and never invest more than you can afford to lose. Okay. This is a recent correspondence with the trader about the platform we see as investors. So that's the front end, so people can see in real time where their investments stand and track them. I used to use spreadsheets, and this is the trader speaking. I used to use spreadsheets, which were very time consuming, but there is a one-to-one correlation to that and what goes on in the back end. It keeps track of each individual progress, and it also updates me with the goals needed on a daily basis. I do make more than what you earn, of course, which is my profit. If I do not meet the goal, then it dips into my profit to make up the difference. Okay, so he's got contingencies if for some reason the daily doesn't work out. So far, I've met the daily goal 99% of the time. Just note that the system is a front end, not the back end. The back end you do not see, but it is linked. Okay. Of course, you don't see his trades going on, That's very personal and private, and his clients are very confidential, so we're not going to see that, but you are going to see the results. Subsequent to the group call, several friends and I had on December 4th with Joseph, the program director. I had a couple more long phone calls with RT, my friend in LA. RT, in turn, has had at least two more long phone calls with Joseph. He's very impressed and definitely decided to proceed with it with six figures. Okay, he's confident. I helped him think of good questions to ask, and between my questions and his questions, he came away very favorably impressed with all of Joseph's answers. Our questions were not just about the mechanics of the operation, but about the kinds of things one would ask when conducting due diligence. Both of us agreed that the very fact that Joseph is so accessible and responsive and happy to speak to his clients is very auspicious. Plus, in his conversations, Joseph doesn't just talk and talk over the other party. He stops and listens. He's a good conversationalist, very attentive. He's respectful, courteous, listens to you, never seems in a hurry, never interrupts, never evades a question or beats around the bush. All of his answers are highly relevant to the question. And don't you hate that? You see reporters asking questions to these politicians, and they never get a straight answer. Okay, so he's professional, responsible, evidencing that regarding any possible way a client could possibly lose, he has already thought of that and created a mechanism or a strategy to mitigate. Further, RT made several suggestions about changes to the contract he felt would improve it. Joseph was very open to every one of RT's suggestions and easily agreed to implement them. Okay? Now, that's kind of unusual, isn't it? Kind of nice to see a guy's open, flexible, looking for his clients' interests, keeping their interests, on the forefront. Joseph told me that all new contracts for new clients going forward will contain these new improvements. The bottom line is we feel that the system design itself eliminates risk as close to zero as reasonably possible. But beyond that, we are sold on the person himself as someone who listens to suggestions, is very cooperative in working together to achieve the best result for all concerned. Okay, so here's some Q&A. We'll just go through that. Question, they say they're a crypto trading company, but quote in USD. What currencies are accepted for investments and what currencies are given when making withdrawals? Okay, you can withdraw by USD bank wire or Bitcoin or Tether, USDT. For US bank wires, there's a $50 withdrawal processing fee. Banks always charge fees. That's the bank, not him. BTC and USDT are no charge. Okay, so my suggestion is if you put in Bitcoin, take Bitcoin out. Put in a bank wire, ask for a bank wire out, but you've got these options, okay? You've got Tether via the Tron network. You also have Tether USDT versus the on the Ethereum network, okay? So one can also deposit into trade the already earned interest from one's profit wallet. So you can roll over your profits, of course, okay? So question, where does one see the investment contract with the guarantee on principal and profits? On the website, at the bottom of every screen, there's a privacy policy and terms of service disclosure. So you can see it there. Any idea how long they've been trading or what their track record is? Joseph is the trader and programmer. He has been trading this particular system since 2021, which makes it now 4 years. These are not speculation trades, but rather arbitrage, which makes our earnings fixed. Joseph claims to hit his targets 99% of the time, and if he's short, he pulls it out of his own earnings to cover the difference. Wow, that is comforting. And you know what that does is that maintains consistency and reliability. So you don't have to worry about the ups and the downs. I've been involved in so many trading programs where the trader does great for 3 weeks. Yeah, go on, kill it, man, keep it up, go on. Wow, look at that. And then he takes a drawdown of 30%. I was like, oh my gosh. And that just happens too often. Okay. Um, so he's trading Bitcoin. That's all he trades. What gave you confidence about it? Did you have an impressive testimony from the person who introduced you? Answer: I've listened to Joseph on several calls with investors, and I've had numerous one-on-one conversations and text chats with Joseph. He has more of an engineering persona, okay, not a sales type. He's an engineering kind of guy. He's a programmer. This came by recommendation from a longtime associate of mine who I respect. There weren't any glowing reports or salesmanship involved. Joseph has been very responsive with various requests regarding my account deposits and internal accounting. With compounding available, there's no need to make large initial deposits to eventually have a large trading balance if a person can wait 12 months for the compounding to work, or, as we have seen, 6 months maybe. Did you notice that every answer is printed twice in the FAQs? Uh, Joseph just provided us with the current front office platform, and there's a few bugs. He's had a few bugs and he's fixed them. After opening the account online, I saw a requirement to submit a KYC. What's that for? This is for clients who invest with US dollars. It does not apply to those who invest with crypto. Again, folks, get away from the banks. Start learning how to manage your life with crypto as much as possible. All right. So, this is not for reporting purposes. It's to protect the group in case there's ever a question about who is making withdrawals from the account in the future. So that's a CYA thing. Okay, cover your ass. Question: the group looks interesting, but if all they trade in is BTC, I've heard this is going to go away very soon with the QFS. What is that? The quantum financial system, only using certain cryptos. Well, first, that idea that cryptos that are not gold backed will disappear is being promoted by gold bugs and QFS enthusiasts with certain perspectives. Okay. But thus far, it is not being borne out in reality, with Trump endorsing Bitcoin. And by the way, El Salvador adopting Bitcoin as a national currency, one national currency, and even considering establishing government Bitcoin reserve, which Trump is doing, with the price having shot up from 70K to over 100K just from November to December, and with the large corporations like Amazon considering allocating 5% of its reserves, and that's a lot, folks, to Bitcoin, it isn't going anywhere anytime soon. In fact, most analysts see its price going far higher. Folks, we're just entering the early stages of mass adoption for obvious reasons. People are losing faith in the traditional banking and financial industry, and they're looking for alternatives. And Bitcoin is decentralized, by the way. No one's going to take it down. And so that's a whole different discussion. Okay. So the program director is a PhD trading genius with a widely diversified portfolio of currency assets and trading relationships. He isn't limited to just trading one crypto. If he can't achieve his desired results with one asset, he'll use another. Brilliant. Okay. Third, the up or down price makes no difference to his profits. Actually, he refers to himself as more of a broker. He's essentially brokering BTC deals between institutions, and he takes the spread in price difference for himself. So he has both sides of the transaction, resulting in low to no risk. Okay, when these deals go down, folks, the buyer or seller, they get locked in with a quote. All right. And the broker is locked into that quote. So there are no fluctuations between commitment and exchange. And then it removes the term trading, which has a more risky and a bit negative or cautious connotation. So he can make profits simply by brokering the disparity in prices in the present moment between buyers and sellers. Okay, in choosing which program to invest in on the dashboard, how can I get the highest returns? Well, he's just recently reduced the several options, so the options are pretty simple and straightforward, which I just showed you earlier. Okay, so so we're going to leave it at that. He's got quite a resume of achievements, which we won't get into, but he is a PhD in information technology, and he's got the client base to do what he's doing. We'll just leave it at that. And then here's a chart illustrating what I showed you earlier, how a $1,000 deposit can quickly compound into something quite notable. Okay, so that's the program. Simple, straightforward, easy to deal with, and I'll open it up now for Q&A. If anybody has a comment or a question, I'd be happy to answer the best that I can.